What's going on, YouTube? If you read this title, I'm sure you already know what the video is about. So let me just get straight to it, right? I am on gold and we are in an uptrending market. So I drew this perfect bullish trend line, right? So now what I'm expecting the market to do is test back at this trend line and continue in the bullish direction. Now remember, the trend is your friend. So follow it at all times. So the area that I will look to enter my trade in is at this retap of the trend line, right? I will place my stop somewhere underneath these lows, and then from here, I'll target these highs. Now, let's see how the market plays out. Or so you thought. Now, now the unfortunate reality is that many traders analyze the markets just like that and constantly wonder why they're on the losing side of the market. What these traders need to understand is that obviously what you just seen was not price respecting the trend line. It was liquidity being collected before the next major expansion. You might not understand yet, but watch this video and it will all begin to click. So first thing first, right? Just take this very clean look at gold from an unbiased perspective, and then I will add my CRT flavor and you will begin to see exactly what I mean, right? First things first on this market on gold, as you can see here, we had this expansion on Friday. So from that point, I can already understand that because our last major move in the market was an expansion, the only things happening within this range from this high point to this low point is reaccumulation. Let me just draw this area out so I can make it very clear for you. Now, what we're going to look for is internal liquidity points. Here, you also had this area here. So now that we have our internal liquidity points, let me just go ahead and add one more area that will mark the peak internal of the range here. Let me extend our ranges out so you know exactly our major high and major low within this range are. Now you understand that we just had a major expansion. So what part of the CRT cycle is you want to look for accumulation manipulation to then get ready to signal the expansion, right? So what we have here was this one, our first number of the phase being phase one. We have this accumulation here. Now understanding that we are within this range, you want to look for our peak manipulation. So you'll have phase two within this area, and above our peak manipulation areas, you'll want to see our expansion. So now you understand the market is now prepared to continue and target back up these highs because our last major move was an expansion. Now, just to show you how the market actually works, right? Some people would analyze the market like this, right? They will analyze the market like this and think we are in a downward trend line. They will think, like we have a bearish pennant or some type of bearish pattern forming in the market. Now, just to show you how quick things play out, let's just watch what happens. So now from this point, you tell me who was on the right side of the market and who really understood what they were doing before it actually happened. So now I'm going to clear this chart and show you why it's better to see price through candle ranges, not diagonal lines, right? Before I get started, I want to show how trend lines can also throw traders off even if they were in alignment with the same direction, right? Here, you had this bullish uptrend, right? You have two touch points. You have this first touch point, this second touch point. Now, unfortunately, there was many traders who would put their buy orders in at this touch point and still, like I was saying, target this high, but they would go in profit and not know why the market just hit their stop loss. For a one more example, there was also traders who analyzed the market this way, right? They had clear reason to believe that we are in an uptrending market within this zone because you have one touch point, two touch points, and then to even add extra confluence, many of them would drag this area since it was a previous high, right? And then they will be convinced that from this point, the market is likely to rise because they tricked themselves into thinking this diagonal line means anything. So what they would have done, they would have placed their stop just like this within this area. And once again, they would have took a loss without exactly knowing why. So now I'm going to clear this chart and once again begin to analyze things strictly from the CRT's perspective so that you can see just how clear that it is in comparison. Okay. So we already understood this whole line was nothing but expansion from this low to this high. So we already have in our mind, just off of the name expansion, we're looking for price to go higher. So all of we're looking for is buys within this range, within this entire range primarily, right? So now you don't have to draw every single internal liquidity point. What you just can simply do is understand the phases, like I have begun to train my eyes to see naturally over time. And I understand that naturally, once price comes into the highest or lowest points within the internal liquidity range, so something like this, and then you have a secondary area of liquidity here, and then we have our major high, well, our major high here, and then we have our major low here, and we was looking for internal liquidity to be collected before we start targeting buys. Okay, and before we even do that, we look for our phases. How do I label the phases? Accumulation, manipulation, expansion. So very quick here, let me make this a little bit smaller. All right, we have our first phase here, because on the lower time frame right now I'm on the 1 hour, but on the lower time frame, this little retracement here was accumulation happening in the market, right? So once you start seeing these bearish candles get stronger and stronger and close within this internal liquidity point, and then especially how you see here on the 1 hour, still we have a sweep of that past bearish candle low, and we ran having price continue higher. But just off of understanding how our phases work, we naturally understood that we were entering phase 2 in our accumulation, manipulation, expansion cycle, which is obviously manipulation. So you were actually waiting for price to come into this area in the first place, right? And then you understood that, okay, once price began to close, once we begin to see that we have more candle closes above our accumulation point within the range, that is then the beginning of our full phase 3. And in phase 3, we understand that this is now the beginning of our expansion. So from this point, here's what I do. Once I understand we have our phase 3, draw the arrow, and now you just understand that no matter what is happening on the market, you're in an expansion overall, and price will be getting higher. Now, if this clarity already didn't show you why it's better to analyze through the candle range theory perspective, another way to actually break it down even more is that candle ranges show the real momentum and body close direction. This is key in the market, why it's better to analyze from ranges, because you get to see exactly where that candle closed in relation to the range that is in, based off of the previous candle. When it comes to trend lines, they completely ignore internal structure and they give you false context, right? Let me see if I can draw another trend line structure here. This is another trend line example that you could have drawn here if you were a trend line trader, and just look at what happened, right? You had another breakout. This is the classic, because you have a classic fake breakout move. You have buyers thinking that the market is continuing to rise, the price is breaking out of this trend line, and they're expecting higher prices. Just off of that quick look what happened. Stopped out again. And many trendline traders will simply wonder, why are they getting stopped out? Because they do not understand that just because price taps a diagonal line does not mean that it has to respect anything. But the market has to respect a bullish or bearish closure above a line within the range, because it directly shows buying pressure versus selling pressure. So even if you was to carry on and continue to analyze this market, right? At this point, I have no idea what's going to happen, but I'm just going to analyze as if I was a trend line trader. Let me take all of these other things away. 1 second. So if I'm a pure trend line trader, obviously I see that we have this large bullish movement. You're probably beginning to draw a trend line somewhere like this. And then let me just watch and show you what happens, right? It's how I will continue to analyze this. Okay. Price comes here. We're approaching a trend line. We are in an uptrend. Let me go ahead, begin placing my buy orders, target this high. Or actually, you have many traders actually draw their target even higher, because they're anticipating that we are in this complete bullish movement on gold. Now, let's just watch and see what happens. Eventually, price stopped them out and they were wrong yet again. So let me just keep going, right? So now we have a larger trend line opportunity coming up, right? Trend line boys for life. So so let me just draw this from this low, right? I seen that price begin to retrace this area, right? So now I draw my next trend line expansion. I begin here. I see, okay, let me go ahead and take this another trade because price is respecting this trend line. So surely the market will reverse. Let's see. Once again, what happened? It was a temporary reversal, directly stopped them out, and they were wrong yet again. So now let me keep following this with another trend line example. Now, as you can see, let me extend our trend line here. Now we have a strong trend line, right? This trend line has touched 1, 2, 3, 4 different times. So I'm pretty sure I have utmost confidence that the market will respect this area and price will begin targeting higher. Let's see what happens. Yeah, again. I'm sorry. I had no idea this would happen. Oh my. Yeah, again, you can see stop loss was hit and the trade was invalid and you had lost money. Now, I'm pretty sure that we have here price is respecting this area. Our trend line has not yet been broken. I'm pretty sure that price will continue higher. Now is the time. Also, I see that we have extra confluence because we have this line here. So what I'm going to look for is a break here. And once we have this break of this high, I'm going to long the market. I'm going to long the market and target these highs because surely now it would be hit. Oh, okay. Well, I was wrong yet again, but like I said, trend line trader till I die. So now what I'm just going to do is I'm going to just extend out my trend line to a more accurate point of structure. Okay. And I see that just here, just because we had one bearish candle closure does not mean that this trend line was yet broken. This trend line has still strength in it. So now I'm going to target my buys once I see price begin to rise above this trend line. Price never rose above the trend line. And so there you go. That is a clear front example on why trend line traders are liquidity in the market. So now before I end this video off, I'm going to show you one more example of this entire market layout through the lens of candle range theory and how it would have been better to analyze without being stopped out so many times. So now that I'm analyzing things back through the CRT perspective, let me show you how I would have analyzed this area. So it's the last thing that you see, right? Now, just off of having the full capture of the market and what we understand is that price was previously in an expansion, right? But when you take a look back and you understand what the market is forming at a larger scale, you can actually see the accumulation, manipulation, and distribution has begun already playing out, right? So you have your range high here. Just draw this out. So now, just off of understanding CRT, you should know by now that I look for a 1, 2, 3 accumulation, manipulation, and in this case, distribution, which is what was shown here, right? This was our accumulation. All of this was nothing but manipulation playing out in the market. And I understand that once price comes back underneath this area, we are in distribution. Okay. So this means that automatically I understand that price will be going downwards. Okay. So from this perspective, how you analyze this, just to show you a very quick way to look at it, right? Since I back tested the other one, I'm just going to be very quick on this because I'm not trying to actually break down trades, but I'm just showing the directional biases with the market and how it's better to look at the market overall from the CRT perspective as opposed to trend lines. Now, you can have something like this because you understand that as long as you understand that the direction is bearish, that's your golden point, and that's what I'm trying to get across here, right? You can have your stop, your target somewhere here, and you could just place a random trade and just watch what happens from this mark. So as you can see, just off of me placing one trade and me being in alignment with the overall direction, one trade survived all of this. Now, as you've seen when I was doing my trend line examples, all of those trend line examples hit stop loss very, very quickly. But because I was in tune with where the market was actually going directionally and the phase that it was in, even if my entries were slightly off, I can still be saved because I had the right alignment with direction. And even if you took some trades too early, you were still in alignment with the direction, and the only thing that was off was your timing. This is exactly why trend lines are considered liquidity. So now very quickly, I'm going to go over what trend lines actually do, okay, from the CRT perspective. So what they actually do is they visually attract trader bias. So your entries, your stop placements, and you understand that those areas are likely to have a lot of emotional traders within them. So the market makers know that most people will react exactly at these diagonal support zones. And this makes them build up liquidity, not true structure, because the market makers know that this area is nothing more than built up orders, even if it may look like a trend line direction. So now that's going to be it for this video. I hope this video was able to shift your perspective on how you should be able to see CRT and why trend lines are liquidity. See y'all in the next video. Peace.